All right, so I'm going to do one more video. This is interesting as hell. CitiGroup, too big to fail bank, just cornered the precious metals derivative market. 1 week, this is from Zero Hedge, 1 week ago, when we scoured through the latest OCC quarterly derivative report, in which we find that the top FDIC-insured 4 U.S. banks continue to account for 90%, or $185.5 trillion of all outstanding derivatives, which as of March 31st amounted to $203 trillion. Nothing new here. We found something fascinating, which he links to. Based on the OCC derivative update, JP Morgan had literally cornered the commodity derivatives complex when from just $226 billion in total commodities exposure, JP Morgan's notional soared by 1,690% in 1 quarter time frame to $4 trillion, or about 96% of the freaking whole total. Tell me that the club is not preparing for the collapse later this year. They have to control the entire commodities market, because when people start flooding into that as a safe haven, they have to make sure the prices are controlled by them. So some, without even bothering to read the article, did what they always do when reacting to Zero Hedge articles. Accused it of writing a wrong post first and then asking questions later, and then coming up with some utterly incorrect response to show just how wrong Zero Hedge was, because guess what? The Office of U.S. Comptroller, U.S. Currency Comptroller has clearly fat-fingered trillions in critical data, which is far more logical. No. As usually what happens in these situations, Zero Hedge was right. There were some tongue-in-cheek apology, but hey, at least someone got to boost their traffic briefly by name-dropping this website. Incidentally, apology accepted, which could have been checked simply by looking at all bank call reports, in this case the quarterly regulatory capital report, Schedule RC-R, which made it very clear that indeed JP Morgan's OTC commodity derivatives had exploded to $4 trillion. For those too lazy to check before tweeting, here is the number of OTC cleared other commodity derivatives for JP Morgan before, as of December 31st. So he links the amount, and then as of March 31st, absolute massive increase. Furthermore, while we await the OCC to respond to our inquiry, and he says we're not holding our breath because he's not going to get a response, nobody has disputed our claim, because it is purely factual, that as of quarter 1, the OCC decided to exclude, all of a sudden, well, we're going to change the report around. OCC decides to do this. Exclude gold as a separate commodity category and lump it in with FX market, foreign exchange currency, for some unexplained reason. So it would appear that gold is money after all, isn't it, they say. So to summarize, as we reported first, and we would be delighted if other so-called financial experts dedicated as much effort to digging through the primary data as they have to desperately try to disprove our article, JP Morgan has indeed cornered the OTC, which is over-the-counter, commodities market, with its $4 trillion in other commodity derivatives, which amount to 96% of total. We don't expect anyone to ask Jamie Dimon, head of JP Morgan, new billionaire, of course, who recently offloaded his shares to you sheep, any of you sheep that went out and bought JP Morgan shares anyways. But JP Morgan has indeed cornered the market with $4 trillion in other commodity derivatives, which amount to 96% of total. We don't expect anyone to ask Jamie Dimon about this on the quarterly earnings call, because this is one of those things that one doesn't want to answer to if one wishes to be invited to the next conference call. However, another big question remains. Just what is CitiGroup, not JP Morgan, doing with the precious metals category. Here's the chart showing Citigroup's metals, mostly silver, by the way, now that gold is lumped in with the FX market, their exposure over the past 4 years. And I'm looking at this chart. I probably should have put it on the screen for you, but it's late. I just wanted to do this real fast. Of note, the 1,260%, 1,260% increase in precious metals derivatives holdings in the past quarter, same as JP Morgan, from just 3.9 billion to 53 billion. Why JP Morgan all of a sudden? Why Citigroup? Number one, these are the club member banks. These are the club. So we know September, October is still the time frame for the big collapse. World economy. China's already had one of their largest downturns in their market in the last few days since like 2008. So you can already see it's going to happen. They're not holding this off. It's going to go down. So why do they have these huge numbers and controlling the derivatives market, the commodities market with all these derivatives? Again, they have to control the price of these things. They have to control the price of these things. So as bonds and paper and all that crap blow up, people are going to want to go to a safe haven. And that safe haven is commodities, more specifically metals, precious metals. And if you're the guy holding all the paper, and the paper is what sets the price, and you're selling it to the right hand, JP Morgan or whoever, JP Morgan sells it back to the left hand, Citigroup sells it back to the right hand, JP Morgan. And that's 90% of the trading that happens. And you're the little 10%, let's say, thinking I'm going to go out, watch the market. And it's going, a bunch of us are going to get in today and it's going to move the market. No, it's not. You're not moving anything. The only thing that's going to destroy that market is physical gold and silver. When the club can't meet the demand for delivery on that COMEX market, number one, expect a false flag attack on Chicago to destroy the CME group / commodities market. That's what they'll do. That's what the club will do so that they don't have to show anything. And anything that you try to inquiry about, Your Honor, terrorist attack, we lost it. We can't produce those documents. Oh, but the DTCC has records of all that stuff too in New York. Yeah, but Hurricane Sandy flooded that massive $36 trillion vault down there, holding $36 trillion of paper assets. Somehow they left the door open. And then when they went back in there after the flood, fire started somehow. Just want to throw that out there, Your Honor. I can't come up with the documents. Bottom line is I don't care. You know why? Because we knew this was going to happen. We knew precious metals would be attacked for a while. Did I think it would be this long? Honest opinion, no. Did not think they would be holding the prices down this long. However, it's like pressure. Right, you keep bottling it, keep bottling it, keep bottling it. When it finally lets loose, look out. And no matter what happens, people are going to be running to save their financial lives. Yes, a bunch of people are going to go straight into the paper, gold, and silver market. Oh, that's where I'll go. Like fools. But there's going to be a whole lot of people who don't even know about that, don't want to play it, and say, I want the real thing. And then you're going to have some of those people who say, I will go play on that market, not to play the paper game. I want the big quantities of gold and or silver you have, so I'm buying this contract out in full now. I don't want the margin and the I don't want the leverage. I don't need to come up with 10% of the money and play with 90%. No, here's the whole 100%. Deliver the good bars to me. And what's going to happen when the COMEX can't deliver? Do you really think there's going to be an announcement that there's a shortage at the COMEX and we're trying to get some metal and we had a problem? Or does it sound more realistic that you're going to hear attack, American soil, COMEX, markets down, something to cover that up. That sounds more reasonable to me, to be honest with you, because that's how the club plays their games. It remains to be seen, I can tell you that much. But even in that same scenario, that just stopped them from having control over the precious metals prices. How are they going to set the prices now? So, you got some of the people out there, at least the one guy was talking about it that owns a silver mining company, saying, why, we need to look at other sources of setting our prices. Why are we looking at the market? Now, keep in mind, former head of Goldman Sachs went to work for, I think, Barrick Gold Mine Company. That's like the largest one in the world, I think. And I said it then. You know why he's becoming the president of that company? Because when the day comes, when anyone else decides we don't want to use this corrupt system to set the price of our metals, including Barrick Gold Mine, we're going to use this other market that seems way better, or no market, we're just going to set the price, whatever comes of this. And the CEO is going to say, guys, we can't do that. I'm the president. I got to make a decision here. We need to stay with the COMEX setting the price. Now, if there's another thing out there, another market setting, whether that's an Asian market or whatever, that starts setting the price as an alternative, and the whole world's saying, man, their stuff goes for more money over there. How are you as the CEO, president of a company, going to say and even try to argue, let's stay here in America where they got the lower prices for the goods we're selling? Or there are way more money on that market. Your shareholders are going to be like, no, get out of here, you're fired. So, nonetheless, I'm sure he was put in place to try to do what he can do to keep it going. But, even if they can't, when this all goes down, as Lindsey Williams said a bunch of times, if it's written on a piece of paper, it's not going to be worth the paper it's written on. I read a little article about this whole Puerto Rican debt thing. Massive, $72 billion, we can't pay it. We're like poor basically. A lot of poor people. The average medium income was less than 20,000 or around 20,000. Average income. That's in U.S. dollars. That's like poverty. That's basically poverty. They can't pay that back either. So I'm reading the story, and it said, the news, of course, news website, and it said something along the lines, due to highly, what was the word they used? Highly complex agreements in such and such, it appears that this level of bondholders are going to get a haircut. And these other ones won't. Will be the first ones to get paid out. And the way the news was saying it was like, basically, that's all of you guys are the ones that are going to get the haircut. You thought they were safe, is how the news story was going. They appeared to be safe. Safe investment. But because of highly complex agreements, we're now discovering not quite as safe as you thought. Matter of fact, you're going to be second or third in line to get yours, which means you're not going to get crap. So I'll ask it again every time something like this comes up. How much do you want to bet every other entity on the face of the earth has the same situation? But you're not going to know about it. The books, they cook the books, it looks good, everything's fine. Until one day something happens, they can't cook it anymore, and then all of a sudden this comes out. And then you find out, it's still, these are safe investments still, right? Well, these were some very highly complex agreements that were made, and it appears those bonds you have, not as safe as we said. All of a sudden, right? Just change the rules mid-game. Even though they never really changed the rules, they just didn't tell you about it up front. And when you were sold that, the person that sold it to you, the company, whatever, it's highly secure, valuable, that'll make money, it's safe, blah, blah, blah. If it's written on a piece of paper, it is not worth the paper it is written on. And when all that goes down, our mining companies, going to take gold and silver out of the ground for free? I don't think so. They can't go to zero. Period. So you want to talk about a safe investment? That's a safe investment. It can't go to zero. 401k, made up in the 80s apparently. And when they made it up, they also made up the part that says you can't get out of it if you have a job. If you have a job, you cannot get out of it. And some of you have companies, even though I told you, ask them to put it in the side in cash. Take it out of the market, put it in the side in cash. Set it on the sidelines. And some of you responded and said, I talked to my HR department or I called the company we use, Fidelity or whoever they're, right? Oh, yeah, we can do that, but we can't do it for you guys, your company. How come? You don't have that particular plan with us. It's a higher plan. If you had the higher plan, then we could set it on the side with cash, in cash for you, but you don't. So the only thing I can tell you is there are some lower grade investments that are, considered safe. If you're really concerned about the market, that's where you could put your investment. So I can't get out of this at all? No, not unless your company changes their plan with us. I used to use an analogy many times. 401k. There is an invisible boat anchor, heavy duty boat anchor. And unbeknownst to you, the club is going to throw it, because it's invisible, you're not going to see it, is going to throw it overboard. And it's so heavy, it's going to take you down with it. Your 401k is going down with it. All I can say is I hope, for everybody's sake, honestly, if the only thing you could do is say, okay, put it in the safest investment, the lowest grade, whatever safe investment, all I can say is I hope even that survives the market crash that's coming. It's going to be a sad day. As much as I don't want to have to face this and deal with this, it's one of those things where you realize, it has to be dealt with sooner or later. So if they're going to do it, let's go ahead and get it over with. Let's go ahead and do it. Whatever comes, comes. We're ready for it. Just give it to us. And don't know if that's quite what the people in Greece are thinking right now, honestly. Because a 21-year-old in Greece had an interesting comment to say. A letter to the Financial Times, presented with no comment, once again, zero hedge, courtesy of them. Sir, memory. No memory of life before the financial crisis. Politics has dominated it ever since. But now I can hardly remember life before Friday night. Fear. I am terrified of tomorrow. All I see is black. Uncertainty, leading us through our days. Every remainder of hope for a brighter future being destroyed by the minute. I look at my 3-year-old niece. I envy her ignorance. I envy her age. I am 21 years old. In the past few days, I feel tired by life. A referendum that supposedly gives me the right to define my future seems to have taken it away. There are hundreds of people queuing at the ATMs and petrol stations. There is silence on the streets. People's faces are frozen. This is the reality since Friday night. But it was Friday night. I guess that makes it all right. Not for Greece. There are and have been for a long time people literally starving. However, it seems that instead of their situation improving, the rest of us will have no different of a fate. Families and friends divided in yes and no camps. We are called to exercise our democratic right by voting on a referendum while having no tangible explanation of what will follow each decision. I see everyone I know ready to take this huge responsibility without even being prepared to do so. I notice us arguing endlessly, everyone supporting their stance fervently. Ego dominating minds and words, while having no clue as to what is really at stake. We all want the crisis to end. We all crave growth and happiness. I do not remember my parents being free of stress and anxiety in the past years. I do not remember not noticing shops closing every month, or the rapid increase of beggars in the streets. People that, before the financial crisis, never had to beg for anything. However, the past 5 days have been worse than all that has been so far. They say that all we hear is propaganda, but we have lost our trust in all sides. Now everything seems to be lies. It feels like an end. The end of our lives as we know them. Yes, the lives that before Friday we already thought could be better. Now we realize they were better then. The only thing we truly wish for is that the worst is not yet to come. Iliana Magra from Greece. This is not a third world country. This is a Eurozone member country. And once, as she said, it doesn't matter. Yes vote, we last 2 or 3 more months, we think we're better. No, worse off. No vote, we can't pay the debt back, deal with it now. Whatever that means happens. So in short, you can kind of look at that and say a yes vote is just an extension for the next 2 months of more crap. More of them waiting for the big pain to come and slowly increasing the pain on them. Whereas a no vote theoretically would mean the pain comes a little sooner. So again, yes, no vote both of them are irrelevant. As she said, what is the outcome of either of those choices? What is the ultimate outcome? We don't even know, honestly. Well, that's it, folks.